All right, guys, let's get started. Can you all see the chart that I'm sharing with you? Give me a thumbs up or an okay or something. All right, we got the good to go. Okay, so some of you guys have been here before. I know Robert, Robo Batman has been here before. Appreciate the ongoing support. Some of you guys are new, so I'll just really briefly describe what we do here on Sundays. When I can, when we're live streaming, what we're doing is we're taking a fresh chart from scratch. We're taking it completely clear of any drawings, and we're setting up our chart for the week ahead using smart money concepts. I post in the chat a link where you can find the smart money concepts time frame analysis, where you can just use your snippet tool and or screenshot tool, depending if you're on mobile. You can cut it or screenshot it, and you can copy and paste it right into your chart. So that's how we do this with the Smart Money Concepts time frame analysis. We for sure will look at Tesla if we don't use up the entire hour, which we'll be looking at going till about 5:15, 5:20. If we don't use up the whole hour with Tesla, we can look at SPY if we still have time after that, and anybody wants to check any other charts out. We can also do another chart, but we'll try to go at least an hour doing this. Still got to make the content for my actual analysis of Tesla as well for tonight. So don't want to take too much time, but we'll get going here with Tesla's chart. So first thing that we do on our new chart setups is we look at, again, I said we copy and paste our smart money concepts time frame analysis right onto our chart. Okay, then we start by looking at the weekly time frame. So for those of you following along, right here, this is how you select your time frame if you don't already know. You select week, W, 1 week, right? So we're on each one of these candles is representing 1 week of price action. So on the weekly time frame, the first thing we're doing is we're looking for to identify the next draw on liquidity, which for Smart Money Concepts, we label that DOL. Okay, and if you don't know any of these definitions or the terminology, you can find those in my subsection on the Discord. It's under, I have my own section, Rustik Smart Money Concepts. It's on Traders Helping Traders Discord, right? And under my trades, there's also chart analysis. There's also Smart Money Concepts. Under the Smart Money Concepts section, there are all of the acronyms for all of the Smart Money Concepts terminology. So if there's ever something you don't know, like, hey, Rustik, what's DOL, right? I'm going to tell you today it's deliver on liquidity. But if you don't know that and I'm charting or people are spitting things out during the week, use that breakdown that I put in my Smart Money Concepts section for those acronyms so that you can quickly look and see, BSL, buy side liquidity, SSL, sell side liquidity, EQH, equal highs, right? So they're all listed there in that section on the Discord. So the first thing we're going to do on the weekly time frame, we're going to look at the next draw on liquidity, and we're going to look at those liquidity levels as buy side, sell side, equal highs, equal lows, and fair value gaps. So we're going to go over here. We're going to grab our tool. I used a horizontal ray. You could use a level. You could use a trend line. Why I like the horizontal rays is it will attach to the price column here, and it'll give us an actual price level. Plus, I know which candle it's anchored to. So really interested in always knowing that on all the time frames. So it'll tell me where, that it's anchored to a certain area versus like a regular horizontal ray or a horizontal line will extend infinite left and right. I want it just to extend infinite right. Okay, so we can see buy side liquidity here, and that is at a previous high, July 17th. Okay, and then we get a price level, 299.62, give or take, right? It's not perfect. We also have buy side liquidity here at 278.85. Okay, so these are our two buy side liquidities. So the next delivery on buy side liquidity is going to be this candle wick first, if we're going to the upside. Okay, now sell side liquidity that we're looking at, we got sell side right there. Okay, we have sell side right here, internal, and then this is an external sell side liquidity. It's at the bottom of a swing point. So also this could be considered all internal to this move here. Or we could say this is internal, this is external, if we're only considering this move up and then this move back down. All in all, it doesn't really matter whether it's internal or external, but we are going to say that they are buy side and sell side liquidity. So you double click, for those of you who don't know how to do it, you double tap on the mobile, you double click on the mouse if you're on the PC. It'll open up this, parameters or, definitions of that line, properties, if you will. And you can click on text and you can change that. So I'm going to put buy side liquidity here. And then you can see I have mine centered to right middle. You can center it however you want. You can center it to center or center middle. You can center it to left. And you can center it above or below the line. I have mine right with middle, right in the middle of the line. Here we got buy side liquidity on this level here. And then on these ones, like I said, we got sell side liquidity. We got sell side liquidity. Also, if there's any questions that come up as I'm doing this, feel free to post them in the chat. Don't always see them as we're charting, but I will get to it as soon as I can. So here's sell side liquidity. All right, so when we're looking here, identify the next draw on liquidity. We're buy side and sell side. We already took those. Okay, so now equal highs and equal lows. And so equal highs and equal lows are going to be found in candle wicks. And they don't have to be candles that are right next to each other. They can be candles that are apart from each other. And they don't have to be perfectly equal. They could be relatively equal. So I'm not going to mark it off because we already have this level. But like this candle wick here and this candle wick here are relative equal lows. Okay, eventually we will probably see price take those equal lows out. But maybe not yet. Also, the fact that we have a sell side liquidity level here and equal lows strengthens that approach that at some point in time we're going to come back and take this level out. So we're going to look and see if we have any other equal highs or equal lows that are of interest to us that are inside. Really, we're only looking for things that are inside of these current ranges. And so all I can see is that one there. I don't see any other ones. We do have equal highs up here, and we will mark those, but they are outside of the current range that we're looking at. So it's an additional level on the buy side. But we will mark it, equal highs. Now, we redo these charts every single week, so that's why sometimes it's like irrelevant to put things that are much higher, like up at 314.59. We're not going to get there this week, and then we're going to erase all of our levels, and we're going to redo it again next week. So doesn't always, it's kind of repetition or repetitious to continue to put those levels on the chart. But I think for practice-wise, it's worth doing it. Yeah, I put it on every single week, regardless of whether we're there, and then it comes off every single week as well when I restart the new chart. So we got equal highs up there, and then we're looking at fair value gaps on the weekly chart. Okay, we are inside of a fair value gap currently. We actually closed it. On this week we closed it. So that fair value gap is now out. So the next fair value gap we're looking at is this one here. And we've been watching that fair value gap for a while, guys, on the weekly time frame. It was pretty nice. It was this big breakdown candle. Okay, now we've taken that all the way, so the fair value gap the fair value has been eaten up in here, which is part of the reason why we trade into it, because there's orders in that range that want to get booked as fair value, and they hadn't had the chance yet. So we do have this fair value gap here that we're just starting to encroach upon. So it could offer some resistance. Sometimes fair value gaps offer resistance right away, and then they sometimes we know they're magnetic as price pulls back into it. We're going to double click on that. We're going to put fair value gap, or we're going to put 1W. Okay, fair value gap minus. So this stands for 1 week. Fair value gap minus is bearish, plus is bullish in terms of smart money concepts. You can label it however you want. If you just want to label it fair value gap, you want to label it bear fair value gap, it's up to you. I choose to label it similar ways that other people who practice smart money concepts label it. So I like to know what time frame it's on. So 1W, 1 week. Fair value gap, I want to know what it is. I mean, red on my charts is fair value gap if I put them on there. But the minus will then also just solidify that it's a bearish fair value gap. So you can label both of them. You can label just one of them. Again, some of these things are just preference. And you need to do whatever makes sense to you in order to be able to remember what it says when you drop into other time frames. So we got the equal highs. Now we got the fair value gap. Okay. To the downside, there's a lot of fair value gaps, but right now we are trading up. So a little bit irrelevant to put some additional ones on the chart as far as the bullish fair value gaps, but you could put one, the closest one, which is the one that's most likely to hold if we were to come back down. And so that's going to be here, and we're going to put it as a green line instead of a red line. And for those of you who don't know how to find fair value gaps without the indicator, okay, because many of you guys are using the new indicator that came with your premium subscription to Traders Helping Traders, right? And that indicator is that Pine Wave script, Smart Money Concepts that AJ built, which is a really great indicator, but it also will change. Like if you drop from the 1 hour to the 5 minute, you're not going to see a 1 hour fair value gap on there anymore. You're only going to see like everything on the 5 minute time frame. So if you want to know how to manually chart fair value gaps and you want to understand more of them, it's a 3 candle. You have to take 3 candles and you're looking at the space of difference between the wicks. And what I mean by that is if you look at this candle here and you look at a candle that, skip one candle, go to the next one, you can see that between this wick high and this wick low, they never came and overlapped. So it left a space here that has not been repriced into. Now it did over here. It's been repriced into, but it hasn't closed. And so that technically the fair value gap is still open, but we have come back down to price into that fair value gap. And so that's how you find one. Same thing here. If you look at this wick low and this wick high, this is the fair value gap we were working on, right? Nice big one. Now we've come back, to balance price out through this unbalanced price range. So also a term that you guys may or may not be familiar with is BISI and SIBI, BISI or SIBI. They stand for buy side inefficiency, sell side imbalance, or sell side inefficiency, buy side imbalance. And that's what we call the candles. Smart Money Concepts calls the candles that, like this, displace very quickly all in one direction. And then they leave a fair value gap. So they are because of an inefficiency in price delivery that then leaves an imbalance where price will want to go back to and balance that section out. Okay, so enough about that. We got our fair value gaps. Let's put here 1W, fair value gap, and then this one was a buy side or a bullish fair value gap. So 1W, fair value gap, and that is bullish. Okay, so we got that one. Now we're going to drop down. We're going to drop down into the daily chart. We're going to look at key levels, premium discount arrays. So that's going to be on the current swing move. Where are we at on the premium or discount side? Premium is above 50%. Discount is below 50%. We're going to also look at optimal trade entries. We're going to develop our daily bias. And we're going to look at high time frame points of interest. Okay, so let's drop down together into the daily chart. When you have your copy and paste, you're going to have to drag it along because I have not figured out a way to anchor it in any specific spot. So we'll put it over here. Actually, let's try to get it as close as we can to where we want to be looking at price. All right. Okay, there we go. So daily chart, premium discount arrays. Right, so we can do that. We can look at premium discount in a couple different ways. We can take the low here and the high here, and we can use our custom Fibonacci settings. If anybody doesn't have these Fibonacci settings yet, hit me up on the DM, hit me up in the Discord. Happy to share. You can set up on your Fibonacci tool on TradingView. You can set up multiple different fib tools. Okay, and I have tutorials on how to do that on my Rawstocks Discord, on the playlists. How to, or not in the Discord, in the Rawstocks YouTube, how to set up and use your Fibonacci tools in TradingView. It's in a TradingView playlist specifically on the YouTube. But you can also hit me up in DMs. You can also hit me up on the Discord directly, and I'll share my settings with you. Have no problem with that. But what we want to do here is grab a premium discount range. So I have a special fib setting right here, premium discount range. You can see it's going to show me what premium, show me what discount is. So you can see right here, middle, equilibrium, right? Discount down here, premium up here. You can see on this swing move, we are in premium. Okay, also if we were to look at this move, we are also in premium here. And if we were to look at the bigger swing here, we are also just above premium in there. So no matter which one you look at, what you're going to be focusing on is it on the premium side? Is it on the discount side? You don't have to label it as such, but that's just something you're going to want to notice, because premium discount theory says we go back and forth between premium and discount. Doesn't mean we go straight to premium and then back down to discount. Either side can expand. Right now we're trading up, so we're more likely to expand the premium side before we come back down to discount. But because we have additional buy side targets here that haven't been taken out yet. But we are also right here back up at premium, so we could easily come back down. So you just want to notice those things. It's not necessarily that you're labeling your lines as such. So when we look at key levels, premium discount arrays, okay, we're going to look at arrays are just, arrays are just levels, horizontal levels. And we're going to look at any that aren't already on our chart. Okay, so I see one here that also is relative equal highs on the daily time frame. So we're going to mark that one off. Make sure it's black so it doesn't confuse us. Okay, and that is a buy side liquidity equal high. Those two candles are perfectly equal or almost perfectly equal, and it's liquidity to the buy side. So that is again on the premium side. And then let's see if there's any additional ones to the downside. I see a sell side liquidity here. Let's open that up. Make sure it's labeled. Okay, sell side liquidity. And then I see also this low here, and we already have this low here in a fair value gap level, but I see this internal sell side liquidity wick here. So we're going to open that up. Sell side liquidity. Okay, so we got some additional levels right there that weren't already on our chart. Now again, this high here is right at this fair value gap level, not worth putting. Right here, we had a level, we breached it and closed above it barely on Friday, so not going to put that one either. And then all these little internal wicks are less important to me because we have, this level here, this level here. And so that's all I'm going to put on the PD arrays. Now we're going to look at optimal trade entry. We're going to develop our daily bias. Okay, we were watching for an optimal trade entry move here that came down and came back up. We said there was a potential that was going to be an optimal trade entry that was going to turn us into a market maker sell model. Well, you can see since then, after FOMC, we took that level out and now we've actually closed above this level. So that's off the table. We are not in a market maker sell model currently. Now that doesn't mean we can't. We could have seen this just come up, pop up, take the top here, come back down, set an optimal trade entry, and then sell off more. Possible, but right now what we were talking about last week was the potential for a market maker sell model, and we did not see that reversal. So we have to treat it as such. We can't just be guessing, right? We're only reacting to what we see. And so what we see here using our Fibonacci tool, and this one's going to be regular OTE fib settings, which I also have shared in my in the Discord section, specifically have these settings. But this is going to be standard fib with extensions. It's going to give us our golden zone, or what we call in Smart Money Concepts our optimal trade entry with our extension levels. And so what you want to see here is you want to see that we had a low, we had a swing high, we came back down, we got to the 62%, not quite all the way to the 70.5%. 62% is good enough. We'll call that our market maker sell model because we had a low, we had a lower low, we had a higher low, and we came back down into our fib levels. From there, we've gone up, we've hit extension levels. We have not quite got to the full symmetrical swing at 258.85, which there's a good chance we'll get there this week. Okay, but what I saw is this, so we're still in a market maker buy model. That's what this represents. So when we're looking at OT and we're developing our daily bias, what we're going to look at is specifically those things. Okay, so I'm going to take that fib level off, and what we've determined is that we are in a market maker buy model. Okay, so you can put this on your chart because I don't know how many times I've started a trading day and I spent a bunch of time doing analysis, then I get in the mix of the session and I forget everything I just went over the whole weekend. And so putting these things up here is like a good reminder that we're in a market maker buy model. And so when we're in a market maker buy model, price is wanting to reprice higher, not lower. And that's where we're at right now. Okay, and then what you also want to put in there is you want to put, and you can put that wherever you want. You also want to put that we are daily bias bullish. You may ask, well, what's the importance of these? What do you mean? So daily bias bullish, right? So last Friday, we closed above the previous day's candle close. Okay, I don't care about the wick so much, but this move, even though a small one, closed above the close of Thursday. Okay, market buy model. What do you mean? What do I mean? What we're looking for is we're looking for price to potentially give us a good entry. If we're in a market maker buy model, we're looking for maybe Tuesday or Wednesday for a low of the week where we can enter and then we can continue to the upside. So those are why those are important. It doesn't mean that Monday we're going to come out of the gate and go ripping. No, just because our daily bias is bullish and we're in a market maker buy model, what we're looking for is we're looking for a good entry next week in order to maximize earning profit and potential, right? So if Monday gives us a nice low, we're going to enter in a bullish position. If Tuesday gives us a nice low, we're looking for an entry for the week or for another week out, right? We already missed our low here. You know, we were in puts. We sold when we came down here, or at least anybody who was following me. But this week, right, if you didn't buy in last week, you missed your entry there. But what we're looking for is for price to come back down sometime into the week, give us a good entry because we're in a buy model and we have a daily bias bullish. And our weekly bias, if you were to look at it, is also bullish. So we're looking for price to give us some kind of entry to the downside where we can then write it up into this fair value gap or into this equal highs up here. Right, so we got our OTE, which was here, our market maker buy model. We got our daily bias bullish. Now last, we're going to look at our high time frame points of interest. So for me, high time frame points of interest can be anything on the daily chart, that isn't already on our chart. So we got buy side, we got sell side, we got fair value gaps, we got equal highs. So what I like to use for high time frame points of interest, and this isn't necessarily a smart money concept. I mean, the high time frame points of interest is something that goes along with it, but I use the fixed range volume profile and I look at a couple different swings. So I'm going to look at, I'm going to start off with this swing here, which is the current swing we're in, and I'm going to look at volume node points of control for areas that we were at, and those could be areas that we come back down to or come up to if we're looking, if price is going to make a certain move. And so we have on the swing that we're currently in, volume node point of interest, or you could put POI or POC, point of control. So there's one. Okay, then we're also going to take and look at this bigger swing here. And we see another volume node point of control right there. And I anchor them to the swing highs. And then we're going to also look at the bigger swing right there. Then you can see that point of interest is also currently where the most recent swing, which is probably why we spent so much time teetering around there before we took off. So there's high level of volume there. And then let's also, just for kicks, look at this entire that entire move there and see if we get anything different. Make sure that's anchored to the bottom candle. All right, there we go. So all of this move all the way back from the beginning of 2023 gives us one final volume node point of control that I'm going to put an anchor to that candle. Okay, then I'm going to take that off. I'm going to label it volume node point of interest. So we got a couple of additional high time frame targets here, right? Some things that we didn't already have on there, a couple different volume nodes, and they're all kind of within the same area. So 235 all the way up to 246. So you see, like, current price, we're below all those volume node points of interest. And so we have taken them out, but because they are still volume node points of interest, including the most recent price action, they will always be relevant until as long as they're still there, especially if they're below. I mean, if they're above or below price will want to navigate back to those. Just like fair value gaps are magnetic, when we get too far blown off of a fair value gap, we'll pull back into a fair value gap. same thing, volume node points of interest, right? We're looking at multiple different time frame or multiple different like sections of candles, but they're magnetic. If we blow off and it still shows that these levels are points of interest, we'll come back down to them and we'll test them again. So we want to have them on our charts for sure. All right, so then we're going to, let's all together drop down into the 4-hour time frame, and we're going to look at, again, premium discount arrays that might already not be on there. We're going to see if there's any additional optimal trade entries. We're going to also look at market structure. Okay, so we'll drop down, 4-hour time frame. Okay, 4-hour time frame. Let's see. I don't see any signs of anything different on the optimal trade entry. Again, we already identified market maker buy model right here. And we'll see if there's any premium or discount arrays that are already on there. And you can see like the peak here, we already got that level. We already got this one. Yeah, don't see anything that isn't already on our chart there. When we look at market structure, there's a really good indicator that you can use by Rawstocks that has market structure built into it. So this is one that I use. I don't always keep it on my charts, but I do use it. And so what you can see here, it's kind of small and hard to read. Let me take this premium discount area off. What you can see here is like right here where it says MSS. Oops. So that's a market structure shift. So what that means is that wherever that market structure shift happened, and let me blow it up so you can see it better, because our level kind of looks like it's sitting on it. You can see this high here over to this block here. And it's labeled right there, that block specifically, because these wicks only came up to that peak, but this block actually traded above it. Okay, so there initiated the market structure shift. Okay, and so on this time frame, you didn't actually see any market structure shifts through all of this price action. Now we are seeing a confirmation of a market structure shift. Okay, and when a market structure shifts, there typically ends up being continuation. Let me see if I can find another one. We have a market structure shift here. You can see there's continuation in the direction it's going. Right? I don't see any other significant market structure shifts in any of this price action, but you saw one here, market structure shift, continuation. Right? Market structure shift, continuation. So typically, I mean, there's no guarantee how much higher it's going to go. That's why we use other things. But we got a market structure shift here. So we're looking for like even minimal continuation into this fair value gap right here, right? More continuation would be to this buy side liquidity above or this buy side liquidity here. But it's unlikely that when a market structure shift happens that we're just going to see it roll over instantly. Okay, and if you look at RSI has room for the price to continue just like what we're talking about, continue up into this fair value gap or into this buy side. Right? I don't use RSI a ton, but when a market structure shift happens, which is what this is, MS, we're looking at market structure on a 4-hour. That's what this is specifically. I would not use the trade signals in here. It does have trade signals that you can, enter and exit on. There are these little triangles. If you use that, I mean, I've found that they're, only so reliable at best. But I don't use them particularly myself. But the market structure aspect of it is very good. So I'd consider using that indicator if you like. And again, here I can show you guys which one it is. So it's the market structure right here, breakers, market structure breakers by Rawstocks. Rawstocks has some really awesome indicators. And I don't know if the market structure stuff is built into that PineWave script or not. So it's worth taking a look at that specific one by Rawstocks. Rawstocks also makes the smart money concepts, which I think is partly the script, how the PineWave script is built off of kind of AJ looking at the smart money concepts by Rawstocks and then developing it into something even better, which I did help work with him a little bit on that. And I think he did a really great job. So, but if there's something that's missing that we talk about, like, you use this one, especially as you're learning smart money concepts. I like to say that the indicators are kind of like training wheels as you're trying to figure things out. Eventually the goal is to take them off and not have to use them. But while you're learning, they can be a great tool. Okay, so then let's drop down into the 1-hour time frame. We've already identified our market maker model down here. And so we'll look at fair value gaps on the 1 hour. We'll look at previous day high and previous day low. Okay, so we got our 1 hour time frame here. We're going to put our previous day high. So that's Friday's high right there. And it's almost in that fair value gap, but not quite. So previous day high. Sometimes if you're using the indicator is going to give you previous day high, but it's going to show you based on market close, not market open. So like if you're showing your previous day high on there wrong, it's because it's probably showing you Thursday's previous day high instead of Friday's. So by manually doing it, and it will update by Monday's session, your previous day high will be Friday using the indicator, but just specifically like in between trading sessions, it's going to be incorrect. But if we're doing it manually, we got it. So let's look at, there's Friday's low. So pretty small range, previous day low. I didn't think we'd get much because it was OPEX, which OPEX typically is a nothing burger, even though it gets a lot of hype. The repositioning has already happened earlier in the week. So we got our previous day high, we got our previous day low. We've already got our market maker model. It's market maker buy model. Now we're going to look at fair value gap as well on the 1 hour time frame. So on the 1 hour time frame, there's all kinds of fair value gaps. But what we want to look at specifically is the fair value gaps that happen during a market structure shift. So you can see on the 1 hour time frame, we have a market structure shift here, and we have a fair value gap right here that was laid in the candle that gave us the market structure shift. So when we get into these time frames and you're charting manually, 1 hour and below, 1 hour and 15 minute is where I would actually draw rectangles instead of levels for the fair value gaps. And so what I want to see here is I want to see that fair value gap. I'm going to move this out of the way for now. So this fair value gap, I want to see price, essentially hold this fair value gap to go higher. But if we roll back down, I want to see support. It could come back down to the middle or all the way down to it to reprice and then see the support to head back higher. But I want to see this fair value gap hold. If our bullish bias is going to hold up, I don't think we're going to give this anything more than this fair value gap up. Okay, just to be very clear, which would mean this week a low of 239.47. I don't want to see anything lower than that if that daily bias bullish is going to hold up, and if we're going to reprice higher up into this like 268. If we give this up, we're probably done. We're going lower than that. But again, I think if we're going to stay in that market maker buy model, if our daily bias is going to hold up, we're going to hold this fair value gap here because that's where the 1 hour market structure shift happened. And so we'll be watching this one very closely. Also, we got those volume node points of control there as well. And then for bearish ones, I don't care about bearish 1 hour fair value gaps because we got a 1 week fair value gap here, and we already know that. So we're going to pull up into that if we're going to go higher right now. So we got market maker buy model, or our market maker model. We got our fair value gap. We got our previous day high and low. So the last things we're going to do, we're going to drop into the 15 and the 5. Now, for those of you who are day traders, these are your high time frames. It's very important to know what your objective is with trading and what time frames you're supposed to be watching. If you're a swing trader, you're watching, you're trading things like the 1 hour while you're charting your high time frame areas on 4 hour and 1 day, or 1 day and 1 week, right? If you're even a longer swing trader. Now, if you're a day trader, you're really looking like 1 minute chart, and your high time frames are going to be 15 minute, 1 hour. Also, there's, I think inside my section in the Discord, there is a market maker X model graphic, which shows you what your low time frame and what your high time frame actually is, depending on your objective and how you trade. So I'm a day trader, I'm a scalper, so I care about the 1 minute chart is my trading, and my high time frame is my 15 minute and my 1 hour. And so important to know that, very important to know that when you're studying smart money concepts, for those of you who are like starting to dive into smart money concepts, to really learn. Anybody who's not and is interested, hit me up. I can point you in the right directions. I love to help people, help traders figure out where to get the information that's actually good information, that's not going to just be a waste of their time, but going to develop them into being better traders. But there's a lot of reference in what I learned as far as time frames go. So it's super important to know your time frames, know what you need to be watching, because it's irrelevant. Like some people will ask me who are clearly day traders, what are we doing, on the daily time frame? Who gives a shit? I don't give a shit, right? Like the daily means nothing to me. It is way too high of a time frame to determine what I'm doing on a 1 minute trade, right? I care about the 15 minute, I care about the 1 hour, right? The daily is fun to watch because that's where are we going in a month, where are we going in 2 months. Yep, well, the daily might tell us or give us some clues, but where are we going for a month? Well, we just chopped in the same area, which is irrelevant to day trading. There's so much money to be made on a 1 minute chart through chop, when apparently on the day trade or on the daily chart, it looks like we haven't even moved. You know what I mean? So very important to understand those. So let's drop down to the 15-minute chart. And then what we're looking for on that is we're just looking Tesla. We're not looking for London and New York so much unless you trade the silver bullet. Some of you guys follow me with my silver bullet setups. I post them all the time in my chart analysis section because I think that if you could be proficient in trading the silver bullet time frame and you can understand how to do that, you're not going to be locked to your computer all day. You can get in, get out. One hour time macro is all you need to be trading. You could be making anywhere from $100 to $250 on a single contract. Or on 2 contracts or a single trade, and then you got the rest of your day to do whatever you want with, and you're not a slave to your computer. So I'm an advocate for figuring out how to trade that very efficiently. That's a lot of times where my trades will come. You guys see between the 10 and 11 o'clock New York time hour is where I'll typically post my entry, and then see if we can get out in that same time macro, or if not a little bit later. But that's where that London and New York kill zones come in. London is I'll show you here in a minute. So let's just drop down into the 15-minute. Let me see if I got my London time frame on here, and then you got to make sure that your session is set to extended. So let me show you why London is important. I think this isn't set to the right time zone. That's why. All right, here we go. All right. So why it's important to watch London, even though we're not trading it, you can't trade options contracts at all during the London session, right? You got to wait for AM to open. But what you're often looking for is for London to give us clues. Okay, so London sets a range. You can see here. So many of you guys who do follow me regularly hear me talk about the quarterly theory. The quarterly theory is how trading is broken up into 4 quarters, and that's good on all time frames where you can identify periods of consolidation or accumulation, periods of manipulation, periods of distribution, and then periods of continuation or reversal. So let me just show you here what that looks like and how London gives us an example of this. Okay, so right here is our consolidation zone. Our consolidation is, we'll just call it a blue box. Okay, we get a move of manipulation here that occurs, and then we get from there distribution. Okay, so we'll label that green. Now that distribution occurs heading into New York AM session. So we can't even trade that with our options, right? Just a little bit. But what we're often looking for in this consolidation, manipulation, distribution is we're often looking for price to head down to a high time frame liquidity point of interest. Okay, 15-minute on a day trader would be high time frame liquidity point of interest. And then we're looking for price to reverse at that point. We're not usually looking for continuation. So let's just look at this right here, and you can see where price headed to. This was a fair value gap. Previous fair value gap, 15-minute, high time frame, point of interest, right? London consolidation, manipulation, distribution, right into a high time frame, point of interest or liquidity target. Okay, and then we reversed from there. Your target in that situation is London high, or if it was opposite, London low. So let's mark that off and see what that looked like. Okay, we traded up to London high or London low, right? And just so you see that it happened during market hours, we'll look at that and we'll put it on there during market hours. right? And you can see that we traded up to it and we traded up to it again. So even though we took it, the manipulation move, we took London high, we traded down to our high time frame, and we came back up during market hours, we took London high. Doesn't always work perfectly like that, but that's the target in those kind of setups. So that's what I've been trying to teach people lately, is to really be able to figure out, by looking at London on a 15-minute or 1-hour chart pre-market because this is happening like overnight. So when you get up and you're looking at your chart and you're saying, okay, what does it look like price is going to be doing? Where's price heading? Okay, well, price is heading, maybe you're waking up like an hour before market. Oh, okay, price is heading lower. Where is it heading, right? We're going to look at 15-minute. We're going to look at our 1 hour. We're going to look at our high time frame liquidity points of interest, right? So on this chart, it would have been this low, and then it would have been this fair value gap. Okay, so right here, heading into market open, we traded through that fair value gap, right? That's your high time frame. Okay, so we hit that. So we know that was the target, right? And potentially down here, but we didn't get it. Then you enter your position and you write it up. It's just that easy, right? And so getting very proficient at understanding how to read the charts like that is going to be important. Let's drag our last thing down here so we can wrap up Tesla. But we look at London, right? And these are not 15-minute, 5-minute on this time frame analysis. These are not things we're putting in on our chart. These are just things we're observing. So we observe London price, right? And we observe our kill zones. And then on the 5-minute chart, we look for market structure breaks. Again, this is going to be happening live, or you're going to be watching it pre-market, right? Here, we saw our market structure shift, right? And as, again, we're watching this London range, we're seeing that manipulation, we're seeing that distribution. We see that market structure shift, right? We're looking at this. Liquidity grabs, market structure breaks, market structure shifts, okay? So we got the shift, trading down, the high time frame on the 15-minute chart, point of interest, and then the liquidity grab, right? And then we ripped back up to our eventual target. So these two parts of this chart are going to be for watching during pre-market and watching live during market hours. They're not specific levels that we can chart off like we do on the higher time frames. So let me close these two things out. Before we go into any other tickers, is there any questions related to what we just went over? I don't see any typing. Any tickers that anybody wants to look at specifically. And just keep in mind that the higher available liquidity, the better they're going to respond to smart money concepts. So your tiny little stock companies, or your 500,000 shares traded a day companies, they're not going to probably respect the smart money concepts as well. But things like your Mag 7, things like your big tech companies, SPY, QQQ, futures, Forex, foreign exchange pairs, all those perform very well on smart money concepts. Let's take a look at AMD. We'll do that instead of SPY. Like I said, we got about 15 or 20 minutes, so let me pull up AMD real fast. I don't even know if I have it on my tickers. All right, AMD. Oh, I do. Okay. Here we go. Okay, I'll start on the weekly chart. Make sure there's no drawings on it already. Okay, let me grab my Smart Money Concepts time frame analysis from. All right, so there we go. Got that on there. So first thing we're going to do with setting up a new chart, right? We're going to look at our weekly. We're going to identify our next draw on liquidity, buy side, sell side, equal highs, equal lows, fair value gaps on the weekly chart, right? So let's see what we got cooking here. We got buy side liquidity. First things I want to do is I want to look at our premium and our most recent premium discount range for our high and low. You can find the premium discount range easily if you use either the Pine Wave or the Smart Money Concepts indicator. It should show you very easily. Let me open it up here. Down at the bottom, premium discount zones, right? They will very easily show you your most recent premium discount range. So you can see that's the first way we want to set our liquidity targets, is our premium and our discount high and low. It's going to look at the most recent swing. So I'm going to take that off. But we're also going, and you can also use that to identify your fair value gap if you want. It's going to usually tell you probably the one of the best fair value gaps to be watching to hold. So you can see here on this one, it's given us this fair value gap. So let's just go ahead and throw that in there. Some of you guys are like, oh, which fair value gap do I pick? Which one's the most important? So sometimes the indicator will know, and it'll give you a better indication if you don't know which one to pick. Because sometimes there's lots of fair value gaps in there. So we'll throw that one in. We'll put 1W fair value gap, and it's bullish, so that's a plus symbol. Right? 1W fair value gap with a plus symbol. All right, so we got that one. I don't really see too much indication of unbalanced price. There is a tiny little bearish fair value gap here that you could put in. Indicator doesn't show it because sometimes the indicator will close it out prematurely if price is traded into that area, but doesn't mean that it's closed. So let's just throw it on there just to make sure we got an indication of why price might reprice just a little bit higher if it wants to, because there's a fair value gap there. So let's put here 1W fair value gap minus. I usually try to put like one of each, like a good bearish and a good bullish fair value gap to see where price might likely find support. Because a lot of this is really about like just support and resistance in a sense. Fair value gaps just give us an additional target, if you will, that isn't like traditional indicators. It's going to give us another level where we might find support or resistance outside of your standard swing highs and swing lows or your standard moving averages or whatever. It just gives us an additional level where we might find resistance right here, right? We're up in this fair value gap, so we might find resistance inside of here, where if you were to look at this chart and say, why are we stopping at that level? There may not be, throw on your moving averages, like say we do reject right here, and then people are looking at that who don't understand smart money concepts. Why here? Why did we end here? Oh, well, maybe it was this little like consolidation range of all these wicks and candles. No, it's because it was fair value gap right there. We repriced right into the fair value gap. So just an additional level. Like I try to say, smart money concepts may not be the be all and end all of, market analysis, but we're looking for high confluence and we're looking for, additional information, because retail indicators are only so good, and most of them are lagging, and so they're responding to price after it happens. You need to be able to respond to price as it happens. And so understanding how to chart your stuff manually without any kind of indicators, even the smart money indicators, which also can be lagging. If you know how to manually chart smart money concepts and structure, then you're going to be ahead of the game just across the board. So we got our draw on liquidity, we got our buy side, we got our sell side, we got our fair value gap. Nothing else. We got a little wick here we could throw in if we wanted for some additional buy side. If we were to get through this fair value gap here, and then we could say down here also sell side. All right, so let's put that sell side liquidity here, buy side liquidity. So we got a couple additional ones. Now let's drop down to the daily chart. Going to be looking at PD arrays, optimal trade entry, daily bias, high time frame points of interest. So together, let's drop down into the 1 day chart. Let's find where our thing was anchored to. Okay, now you can see our indicator, our Lux Algo indicator, is trying to pop up some more things and show us that, hey, there's premium discount zones, there's fair value gaps. on that time frame that are just hanging out. So on the daily, first thing we're going to look at premium discount arrays that aren't already on there. So let's put here, we got an array there. That is some additional sell side liquidity that wasn't on there before. So we got sell side liquidity. We'll do that on the 1 hour chart. Okay, so we're also looking at optimal trade entry, see where the most and last recent one here. I think I can already see it here. If you went to the bottom and the top, look at how clean that happens. I know Tesla wasn't quite as clean, but see here, low, swing high, right? Perfectly. I mean, wicked down through it, but look at the wick close, candle body close almost right on that level. Okay, so that's our market maker buy model, and we have not seen any confirmation that anything has changed. So when we look back up here and we're saying our bias, we'll put down here, we'll identify in the 1 hour market maker buy model, but we can put it in now because we've already identified it with the most recent optimal trade entry. So market maker buy model for AMD as well. So again, what does that mean? That means that we're looking for price to come back down next week to give us a good entry so we can continue higher. And our daily bias right here, it looks like although there's wicks, our close here was above the previous day close. So our bias on this is also bullish. Right, so daily bias bullish. Again, just because our bias is bullish doesn't mean that price is going to continue to trade higher, but that's what our bias is based on the previous day's close. Okay, now we're going to look at high time frame points of interest. We're going to see if we can get any additional information. So again, for me, I use the fixed range volume profile. So I'm going to grab that. I'm going to run it over here, and I'm going to see that right here on this node is our highest volume. So I'm going to label that my volume node point of interest or point of control, however you want to label it. Okay, and then let's look back at this high over here, and we get an additional volume node point of interest here. Volume node point of interest. So we got a couple that are currently below where price was, and then we'll see if there's anything else. I'm not interested in any other moves, maybe just the current short-term swing like this move here. Let's just see what the current volume is in that range, and then we'll put that one in as well. They're all below current price, which is just important to note. Same with Tesla. They were all below current price, so that means we're going to eventually price back down to them. But we need to take out liquidity targets to the upside first. So if we're moving up, we're taking upside liquidity. If we're moving down, we're taking sell side liquidity or liquidity down. And so right now we're moving up. We're taking liquidity. There's a order block here. And so, good chance that we trade up there first, maybe even take out this liquidity and then price back down to those volume nodes and then some of that below liquidity as well. All right, so we got that daily chart, we got our high time frame, we got our OTE, we got our daily bias. So we're going to go down to the 4 hour chart now. Okay, on the 4 hour chart, we're looking at additional premium discount arrays. We've already identified our optimal trade entry. And then we're going to start to look at market structure on the 4 hour time frame. Okay, so let me take off the smart money concepts. We'll throw on the market structure. Okay, and then what we want to look at is, we already got those. So here, our most recent market structure on the 4 hour time frame, we got a market structure shift. We got a market structure break. We got a second market structure break. So typically 2 to 3 market structure breaks starts to indicate that we should be watching for a top to develop. Even if that's a short-term top, it typically means we're looking for a top to develop. You can see here, market structure shift, 1, 2, 3 market structure break. That third one was just a run on the low here, and then we continue to the upside. Okay, let's see if we can find some other good identifiers without any in between. So this was just a shift. There we only got a shift and a break. Trying to see if there's a good example of multiple, because that's usually trendy if we get, or like, okay, here's one, market structure shift, market structure break, market structure break. That second break was just to steal the stop here before we headed down. Here we got shift, break, 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 right? 3 breaks. That third break just to run on the bottom, run on stops where we developed bottom. So again, you don't really see, you don't see any indication of like 5, 6, 7 market structure breaks, or like, 3 market structure, or like, a shift in 2 or 3 breaks and then another shift that continues in the direction that it's already going. You normally see like 2 or 3 market structure breaks. So the fact that we've already gotten 2, right, and we have like what appears to be kind of a peak developing here with these highs, might see price come back down, might see price come back up one more time, like steal the stops here, steal that top, right, into this fair value gap, and then see one more market structure break, and then see that be the top and come back down. That'd be what I'm looking for, unless this top is already kind of in, and then we come back down from there. But the fact that, again, on this time frame that we've already had 2 market structure breaks would tell me that we're pretty likely to either see one more or just see price correct from there. And that correction could be small or deep, but typically, again, when we see this many breaks, 2 or 3, top is near or top is in. Yeah, so we got that Peter A's. Yep, we got market structure. Okay, we've now let's drop down to the 1 hour, and on the 1 hour we've already identified that we're in a market maker buy model. But that doesn't mean that, even if we come back down, we're most likely going to head back higher from there, unless we see a new optimal trade entry on the 1 day or the 4 hour, where we come down, we come back up. On the higher time frames, we only come back up to like 62 to 70.5%. Then we drop from there. That would indicate that we're in a new market maker sell model, but that hasn't been confirmed yet. So right now we play it as if the information that's given to us, and that's that we're in a market maker buy model. So 1 hour time frame, market maker buy model, fair value gap, previous day high, previous day low. So we already got our model in. So let's look at Friday's high, Friday's low. Is this Friday? No, that's Thursday. Friday. We're not looking for. All right, Friday. And you can determine if you want to use pre-market or no pre-market. If we're going without pre-market, well, I guess the low and the lows are about the same, but the high we'll put right there. So you can see a small range. So we'll do previous day high, right? Previous day, previous day low. So that's our Friday range. On Monday we'll be looking for breakout of range, and whether it's up or down. But once you break that range, you're pretty good sometimes to then go short or long depending on the break. So it's nice to have a small range like that, and it's very easy to trade breakout or breakdown. All right, let's see. Where is this guy? All right, so we've identified that. We got our previous day high, previous day low. Let's see if there's any fair value gaps that haven't been closed or priced backed into. So we can turn on our Lux Algo indicator. We can see these ones here. But let's also look for the one that came in or around a market structure shift. And so what I see is this market structure shift and then this. And so on this time frame, I'm going to take this fair value gap as being the one that we want to see held. But I'm also going to take this one because we did, although it's not a market structure shift, or it's not labeled as such, we did see a high here and we came back and broke it with a fair value gap right at that level. So those 2 fair value gaps are the ones that are important to me on the 1 hour time frame for AMD. And so you can expect that. Again, we might steal the high here and then come back down, but we can't expect that price is going to reprice down into this, 130.70 to 131.62. So basically like this $1 range here, we can expect that price is going to come back down there, or potentially even come back down all the way to 124.5 down to 123.25. But I'd be looking at this one for sure. And seeing if it wants to hold or not, but most likely it will trade back down there. Now there is another fair value gap here that we've traded back down and repriced into, but only with a wick, and so there is a potential that this one could hold too, and send price much higher off of that one. I'm not going to put it on there because again we've we have repriced into it multiple times, and there's one right below it. And so I think if we were to come down and take one, we'd target the other. And then on the 15-minute chart, again, we're looking at the structure, and we're looking at kill zones. So let's go ahead and see how AMD behaves when you're using the same kind of principles that I use with SPY and with, or at least with futures and with Tesla. So I'm going to throw on the London. We got our market structure. All right, so, and let's make sure we got our extended trading hours on. All right, so I'm just strictly going to look at the London session here. And that's on the 15. So you can see there's a range. That's our accumulation. And we didn't really see a really strong manipulation on this one. But you can see that price comes back down just below. So, I mean, you could consider that range, a little bit of manipulation to the downside, and then your distribution, right, came in this 15-minute candle. But then you would be looking for, if you didn't take the trade here and you were looking for the low to be targeted, and you took your short position up here, right, you got it during market hours over here. Right? Or I mean, maybe you could even say this was manipulation. I mean, it's up to you to determine how that looks. But ultimately, you saw this move, you'd be looking to target London low since we traded up. And then you see here, we get a New York high at 140.90, and you'd be targeting London low at 137, and you almost get it. So if you were using that method of watching London, looking for manipulation, and then targeting, depending if we go up or down, targeting London high or London low, then you have a great opportunity to take a nice trade, right? The high here was almost 141, came back down, almost took London's low at 137, so that would have been a pretty sweet trade. And you can also look at it on shorter time frame charts as well, where, yeah, you wouldn't really say that was a manipulation move. You would have said consolidation, manipulation up, right? And then we're waiting for New York to open. You see additional move to the upside, and then you target London low. So you would have a nice opportunity to enter this candle or this candle, targeting this level here, which didn't quite hit, but almost did. So you can use the same principles. Again, it doesn't always work. You can see if you look back the day before, accumulation, right? We get to New York open, boom, manipulation, right? Distribution, traded up into a high time frame target, a 1 week fair value gap here, right? Up into that. You look for your entry, you target London low, right? Takes London low, even takes a little bit more. So again, some nice trades using those time macros. Same thing here. Accumulation, opening up, London or New York opens. We catch that move of manipulation to the upside, right? We take our entry on a high time frame target. I'd have to go back and look what is high time frame right here, but I'm sure there's something. You take it, you target London low, right? You get a nice move, 139 down to 137. So, and even lower, but just using the London high, London low as your gauge, shows a lot of different ways you can use it to enter your positions or exit your positions. So hopefully that has been helpful. We are just about out of time. If anybody has any questions, I'm happy to answer them real quick, or you can send me direct messages on the Discord or comment on the videos. These videos are for premium members only, and so they don't go live for the general public until Monday. But I will post the Discord for anybody in the premium who wants to rewatch it. I will post the link. It's just an unlisted link, so it won't show up to anybody who just searches for it. You got to have the link, but I'll post it in the the video channel under the premium section, where I post all the pregame shows. So if there's ever a point where you miss it live, or some weeks I can't do it live, I always try to post it anyways, even if it's pre-recorded. I post it in the video channel so that you guys have an opportunity to watch it on Sunday before the market actually opens on Monday. Any questions real quick before we jump off? Yeah, you're welcome, CJX. We do this every single weekend. Sundays, usually 4 o'clock my time. I'm on Pacific, 7 o'clock Eastern. Try to do it every single week. Sometimes things interfere and I have to pre-record it. But we try to do them every single week live. For premium, you guys get it every week. Once a month, free. All the free members do it, and we do it in the free section. That's the first Sunday of every month. Everybody gets it. Yeah, you're welcome. Extra Pass 9. No questions? We're all good. If anybody, again, has any additional questions, needs any resources for Smart Money Concepts, send me a direct message or look in the Rustik Smart Money Concepts section of the Traders Helping Traders Discord, where you will find Tesla chart analysis using Smart Money Concepts and Smart Money Concepts education, as well as any questions. I'm happy to send you in the right direction to find the information that you guys need. Again, we'll see you guys on the next one. Thanks for supporting the channel. Thanks for supporting Traders Helping Traders. And good luck on your trading this week.